So our webinar today is entitled Escaping the Quality Death Spiral, the True Cost of Quality in Today's Economy. And facilitating our webinar today will be Ethan Cushing and Corey Ching. And Ethan and Corey are both solution specialists here at Intellex who have worked with several of our key clients to implement solutions to proactively manage quality within their organizations. So today, they're going to be sharing some of their knowledge with us, and they're going to look at some key topics revolving around quality. These topics include things such as the impact of the current economy on quality management departments across the world, the critical problems with traditional cost reduction methods in quality management, and they'll be looking at the link between profit and proactive quality management.
Thanks very much, JP. Hi, I'm Corey.
And hi, I'm Ethan.
We're looking forward to spending the next 20 to 25 minutes with you guys to go through and talk about escaping the quality death spiral, the true cost of quality in today's economy. The agenda that we have today is, first of all, to go through and give you a little bit of a background on cost of quality. Make sure everyone's on the same page in terms of their knowledge around what we mean by cost of quality. We're then going to go into the current economic climate, discuss what the current trends are, what the current status is, and discuss what the impact is on the quality departments across the world at the moment. Next, we'll go through, talk about some different options for improving the profit margin and reducing the cost of poor quality in the quality department. And then lastly, we'll discuss a couple of ways to build the business case for investment. If we've made the decision to invest in the quality department, what's the best way to do it? Okay, so cost of quality. Now, there's a lot of different ways that we can look at this, a few different definitions, but the cost of quality is pretty critical, and it's a part of all the current quality standards, like ISO 9001, AS 9100, and there's really two main parts to it. The first is the price of conformance, or the cost of conformance. This is your prevention and appraisal costs, so things like your audits, your training, anything that you're trying to invest in the quality program to prevent inadequate quality products and services from getting to the customer. Now, this is considered really the proactive management, and this is what we would ideally like to focus on. The second part is your price of nonconformance, or your cost of nonconformance. And this is going to be the significant part, or the significant costs around the cost of quality. It's going to include your internal defect costs as well as your external defect costs. Anything around your recalls, your rework, your scrap, and as well as your product returns. Okay. Another way to look at the price of nonconformance, or the cost of nonconformance, is the cost of poor quality. Okay, so the cost of poor quality really is just the sum of all costs that would disappear if there were no quality problems. And the reason that this is going to be a main focus here is that the cost of poor quality is big. It's normally way underestimated by most managers, but it's typically known that it's up to 15 to 30% of your sales. And it's a huge number. It really is like this pot of gold. It's all this investment in your company to produce products and services that really have little to no value. And another way to think of it is that the cost of poor quality is usually around 3 to 5 times your profit margin. So if you're taking a look at ways to improve your profit margin in the company, reducing the cost of poor quality is the obvious choice. Okay, so there's huge potential here to improve those profits. Next, we're going to move over to Ethan. He's going to tell us a little bit about the current economic climate and what that means to the quality department.
Great. Thanks very much, Corey. So, as Corey was talking about the background of cost of quality and of poor quality, what's happening today in the market that's making an impact on quality? And looking at the cost of quality in a recessionary market and some of the market research that's out there, we looked at managers that were polled based on their decisions in a recessionary market and what they do in order to keep that cost of quality down. And as you can see from the graph on screen, some of the major areas that they've worked on, and in our poll results, show improved management of cash flow and reducing overhead costs and the staff. So those are very reactive measures taken to a poor market. And to continue to build on that thread, how do managers react in terms of changing the business strategy in a recessionary market? And looking at these figures in front of us, we're able to see that some of the most important areas were to streamline the product line and to rationalize it, either new development or even just, again, to reduce those fixed costs so that we're having a less of an impact on the bottom line of quality in the market, and we're able to try to maintain those profit margins. Now, we're going to talk a little bit later about how these reactive decisions may not necessarily be the best for the quality bottom line. And to look at today's market a little bit differently, if we look at the Production Manufacturing Index, and what this tells us is at the 50th percentile for all companies reporting, are they growing or are they declining in size? And that 50 percentile mark, and as we can see looking at the US markets and the Eurozone breakdown, a lot of regions are right at or below that 50% of PMI, meaning that over 50% of the respondents aren't growing as a business when it comes to things like new orders, when it comes to rising nonconformances, and when it comes to profits. And an important question is, what does that mean for the industry overall? What does that mean for quality? And we want to take a little bit of a deeper look into the impact on quality management and where those type of reactive decisions in today's market really lead us.
Thanks very much, Ethan. Okay, so everybody knows that the last few years have been pretty rough in the quality departments. The business hasn't been great. Both Europe and North America seem to be stuck in either a slow market or in a recession. And there's been pretty significant impacts on the quality departments across the world. So what have we really seen? Well, the consistent theme that we keep coming across is that the budget cuts have been fairly broad. They've not necessarily been focused on the quality department per se, but they've been across-the-board cuts to reduce the staff and the resources that people have to do their jobs. With the quality department, that means that there's typically less resources to manage the quality department proactively. So it ends up being a bit more of a reactive as opposed to proactive management with the quality department. What we've seen in some cases is that companies would get into this quality death spiral. And this is what we want to avoid at all costs. It starts off by budget cuts from the quality department. It then moves into fewer people to do the work. So there's really a sense of false improvements. There's false economies of scale here, false savings by cutting the quality department. There ends up being more errors, more rework, less efficiency in the company. The total costs increase, and that causes there to be a lot less profit or a lot less money to invest in the company as well as the quality department.